All right, today we're going to take a deep dive into SRF Limited. Now, this is a really interesting company right now because it's caught between two worlds. On one hand, you have this high-tech, futuristic growth engine, and on the other, a legacy business that's acting like a cyclical anchor. It's a fascinating story of a massive strategic pivot, a huge bet on becoming a global powerhouse in fluorine chemistry. So let's break it down.
Okay, so let's start right here with the central tension. This quote from the management, it just captures everything perfectly. They're openly admitting, yeah, the last year was tough, no question about it. But in the same breath, they're saying, we're not backing down from our long-term strategy. They are doubling down, signaling this deep-seated confidence that a turnaround is just around the corner. And really, this sets the stage for everything else we're about to discuss.
You know, to really get where that confidence comes from, you have to look at the roller coaster of the last few years. Just back in FY22, SRF had this monster breakout year. Things were incredible. FY23 followed with record revenues, but then, bam! FY24 hit what the company itself calls the year of headwinds. It was a perfect storm, really. You had global players in the agrochemical space just stop ordering to clear out their own inventory, and at the same time, a massive oversupply problem hit their packaging business. And that's what brings us to today, with management pointing to the second half of this fiscal year, FY25, as the light at the end of the tunnel.
So what's actually fueling all this optimism? Well, this brings us to the bull case, and it's all about a massive, conscious, strategic pivot. SRF is deliberately shifting its focus, its capital, everything, towards building a future based on high-margin products. And it's all centered on this one core competency, really complex chemistry. Now have a look at this. This chart tells you everything you need to know. It shows you that this pivot isn't just a plan for the future, it's already happened. The chemicals business isn't just a division of SRF anymore. At over 70% of the company's operating profit, it is SRF's profit engine. The other businesses, the legacy ones, they're basically just supporting players now. This is probably the most crucial point to understand about the company today.
And this slide brilliantly shows why that chemical business is such a beast. It's built on what we can call the fluorine advantage. Look, fluorine chemistry is notoriously difficult. It's hazardous, it's complex, and what SRF has done is control the entire value chain, from the basic raw material fluorspar through the incredibly dangerous process of making hydrogen fluoride, all the way to creating these super high-value, specialized molecules for the biggest pharma and agrochemical companies in the world. That is a technical barrier to entry that is just incredibly difficult for anyone else to replicate.
And the company is betting the farm on this advantage. How big of a bet? 15,000 crores. Just let that number sink in. That's the capital expenditure they have committed to fuel the next wave of growth. And guess what? Almost all of it is aimed squarely at that high-margin chemical segment. It's a massive statement of intent about where they see the future.
So where's all that money going? Well, it's going into these key pillars of future growth. We're talking about really high-tech stuff, like fluoropolymers that are essential for EV batteries and for semiconductors. We're talking about next-generation refrigerant gases that are much better for the environment. And of course, they are perfectly positioned to benefit from this huge China Plus One trend, where global companies are desperate to find reliable suppliers outside of China. You add a powerful R&D pipeline with over 140 patents to that mix, and you've got a very clear roadmap for growth.
But of course, it's never that simple, is it? Let's flip the coin. Let's put on our skeptical hat for a moment. For every strong bull case, there's always a bear case. And for SRF, it revolves around navigating some pretty significant cyclical drags that are really holding the company back right now.
This slide just lays out the core conflict inside the company so clearly. On one side, you have this beautiful chemicals engine. It's high margin, it's driven by innovation, and it's riding these huge long-term structural tailwinds. But on the other side, you have the packaging business, and it's a drag. It's cyclical, it's tied to commodity prices, and right now it's suffering from a massive global overcapacity problem. And this acts as a serious weight on the company's overall profitability, specifically its return on capital employed, or ROCE.
Let's break those risks down a little more. There are a few key things that investors are really watching. First, you've got aggressive price competition from Chinese players who are just dumping refrigerant gases on the market. Second, there's the risk that this destocking in the agrochemical sector, what if it lasts a lot longer than expected? And then, on top of all the weakness in packaging, there's always the internal risk, the risk of delays in getting those massive new chemical plants up and running efficiently. Which really brings us to the central question for anyone analyzing SRF today. It all boils down to this. Can the new, powerful chemicals engine generate enough growth, enough profit to actually outrun the drag from that old, cyclical packaging anchor?
Seriously, the answer to that one question is going to determine the company's entire trajectory over the next few years.
So okay, let's try to synthesize these two opposing views. How do we square that powerful bull case with these very real, tangible risks? Well, it all comes down to one absolutely critical factor to watch for in this current fiscal year.
But before I tell you what that is, it's important to understand this term right here. In investor circles, SRF is what's known as a quality compounder. And what that means is, historically, it's been absolutely brilliant at taking its profits and reinvesting them back into the business to generate even higher returns year after year. This strong track record is exactly why investors are often willing to look past the short-term pain. They believe in the long-term compounding power of this business.
And that brings us to the final, most crucial point. For this fiscal year, FY25, the key deciding factor will be this: the rapid and successful ramp-up of its massive new fluoropolymer facilities. If these high-tech plants can come online smoothly, start producing, and start contributing to the bottom line, it could finally prove that the new engine can, in fact, outrun the old anchor. It would validate that entire 15,000 crore bet and set the stage for the next great chapter in SRF's growth story. And you can be sure that's what everyone will be watching.